Kia ora, and welcome to Tuesday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. Analysts are now starting to estimate the cost to the US economy of tariffs. But first, the S&P Global American Services PMI rose in December to its strongest expansion since March 2022. But their manufacturing downturn deepened, with manufacturers reporting falling output and higher prices. New factory orders fell sharply, extending the decline to a sixth consecutive month. The divergence makes the services sector jump look like a sugar rush, one that could come with a hangover. And the December factory survey in the New York region reflects the factory pullback, although that is from an unusually strong November. And a New York Fed study of whether large tariff hikes protect US firms has found the opposite in a detailed survey. This is no surprise to economists, and they suggest that the next round is also likely to hurt American firms further. Further own goals for American manufacturing are on the way. Others say it will shrink US GDP by 1%. That would be a $300 billion hit. North of the border, Canadian housing starts came in particularly strong in November, and surprisingly so. And Canadian house prices are on an extended uptrend, boosted by more sales activity as interest rates come down there. But in a surprise political move in Canada, their finance minister has suddenly resigned, throwing its economic agenda into a tailspin. Disagreement of how to frame Canada's policies when Trump comes to power in the US seems to be at the heart of the matter. Across the Pacific, in Japan, their November PMIs revealed that their factory sector is now barely contracting, an improvement from October, and their services sector is now expanding faster. They had their strongest rise in private sector activity in the past 3 months. So perhaps it is no surprise to know that machinery orders are on the rise there after a lean period. And China's new house prices in 70 key cities shrank by 5.7% year-on-year in November, following the steepest decline in over 9 years of 5.9% in the previous month. This marks the 17th consecutive month of decreases, suggesting that Beijing's extended attempts to mitigate the prolonged downturn in the property sector, such as reducing mortgage rates and slashing home buying costs, have yet to have the effect they are looking for. Prices for second-hand homes were even weaker. China's industrial production rose 5.4% in November from the same month a year ago, mildly exceeding market estimates, and October's growth rate of 5.3%. The expansion was due to a good 6% rise in manufacturing. At the same time, though, electricity production only rose 0.9% on the same basis, so that does undermine somewhat the validity of the industrial gains. And that low gain does match the headwinds narrative that they've been talking about. Their industrial production data seems to ignore that and their weak PMIs. Something's not quite right. And China's retail sales rose 3% year-on-year in November, slowing from the 4.8% growth in the previous month and below the market expectations of a 4.6% gain. This marked the weakest growth in retail activity there since August. But compared to many other countries, this weak expansion is better than inflation. The Indian PMI for December recorded an improving factory sector and a service sector that is still expanding fast. Indian exports in November, however, fell to their lowest level since October 2022, down 5.2% from the same month a year ago. India is not much of a trading nation relative to the size of their economy, so the rise in economic activity is all about internal demand. However, imports surged 28% on the same year-on-year basis to an all-time record high. It might seem a tad ironic for a major oil producer, but Iran is proposing sweeping closures of public facilities, a move officials attribute to icy winter conditions and the need for energy management while the country suffers massive shortages due to infrastructure failures. Iran is on the brink of a 40% blackout in just 18 days, said one local analyst. In Europe, Moody's unexpectedly downgraded France's credit rating from AA2 to AA3, citing concerns over deteriorating public finances amid political instability. For reference, Moody's rates New Zealand and Australia each separately AAA, although perhaps they will review ours after Thursday's GDP result. In Australia, financial system regulator ASIC is suing HSBC, alleging failures to adequately protect customers from scams. And AML regulator Austrac is taking Entain to court over serious money laundering compliance breaches in its gambling and betting operations. Entain operates the TAB in New Zealand. The US Treasury 10-year yield is now just on 4.40%, a little change from this time yesterday. And the price of gold will start today at $2,651 an ounce. That's up $4 from yesterday. Oil prices are down 50 cents to be just on $70.50 a barrel in the US, while the international Brent price is down almost $1 to be just over $73.50 a barrel. And the Kiwi dollar starts today at just on 57.8 US cents and up 20 basis points from yesterday. Against the Aussie, we're up 10 basis points at 90.7 Australian cents. Against the euro, we're also up 10 basis points at 55 euro cents. That all means our trade-weighted index starts today at just on 67.8 to be up 20 basis points from yesterday at this time. And the Bitcoin price starts today at $106,866 and up 3.7% from yesterday. Volatility of the past 24 hours has been moderate at just on plus or minus 2.2%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.